Hey traders, Alex Ong here and welcome to this week's Forex Focus, a show where we look ahead at the opportunities that could be setting up in the FX markets. And in this week's show, we've got an absolutely fantastic opportunity for you. It's one that we're already in, so we've already taken a position in this particular pair. But it's gone against us a little bit, not hit our stop or anything, but it now looks like it's going to be setting up again and will give us an opportunity to actually add to the position that we already have on. It's a fantastic opportunity, so without further ado, let's jump over to the charts and talk about what it is that's setting up. So what we have right here is the New Zealand dollar. And the New Zealand dollar is one, as I said, I think it was maybe a couple of weeks ago we spoke about this, or if not on the Forex Focus, and definitely on the money file. It's an opportunity that we've been looking at. And basically what happened was, as you can see here on the weekly chart, the New Zealand dollar came up here, it sort of printed a high back in 2011. It then came back and approached that high again in 2014. And ever since then, it's been selling off and off and off. And it's just literally been going down, 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 down. Up until the sort of like towards the end of last year. And then from the end of last year through to where we are right now, the market has been pulling back somewhat. So from the daily perspective, you would have seen quite a nice uptrend. You would have had some opportunities to make some money buying the market. But now the market has come to this previous level of support over here. So you can see where the market sold off there. It then sort of finished its sell-off and then started rallying from that point. And now that's a previous support level, which is now acting as a resistance. And you can kind of see this dynamic happen all over the charts on any time frame with any different instrument. And it's a very, very high probability trading setup. Now, let's jump into the daily charts for just a second so you can show you what the opportunity that we're looking at. We initially took an opportunity, we had the trend line in a little bit different previously, but we initially took an opportunity on the breakdown over here. So in fact, you could probably, let's go down to the 4-hour chart, you'll see it better there because you can't really see the entry here. Okay, so on the 4-hour chart, we initially took an entry below this level here. So the market broke below this support level around the 7100 area. We took the short there a little bit too early. And then the market's sort of been going against us ever since. Well, it went with us a little bit, but then it's been going against us ever since then. But what's exciting about this is, first of all, we've seen the weekly picture. So we know that it's a big, big downtrend. The market has pulled back to a very, very strong level of support, which has now become resistance, which you can see here. So the market reacted to that level there. And then it pulled back a little bit. And what it's doing right now is you've got the pair basically coming back and retesting this previous level, this previous trend line, which was sort of holding the market in place. So you've got the market touch there. It touches again. It almost comes back to it over here. So you can see that the market is respecting this trend line. It eventually breaks a trend line and then it's come back to it. Now, what we're hoping for is we're hoping for the market to now sell off from this point here and sell below this low over here. So if I just move this down a little bit, if we can get the market sell through this low over here, we'll then be looking to add to our position there. We'll also probably move our stop in. So currently our stop is above the highs over here, and we'll look to potentially move our stop in just above these highs here if the market sells off from here quite nicely. Basically just, narrowing our risk a little bit, particularly considering that we're going to add another position if the market breaks down from this level. But the thing with these sorts of positions here, where you add to your position, so you take the first technical entry, and if it, you don't know if you're going to be right or wrong on any particular entry, you can only just sort of do your best and take the high probability setups. Once if a trade goes against you and it kind of gives you a second technical setup, often retail traders, they're a little afraid to take that trade. But for us, like for me, when I'm looking at these setups, I actually get a little bit more, I get excited about those opportunities, because if the market goes against me a little bit but fails to go against me and fails to hit my stop and then moves back down towards where my entry was and breaks another low, that to me kind of is just a little more extra confirmation that my analysis initially was actually right. So it kind of convinces me to put a little bit more money on the trade. And this is sort of where my bigger winners come, because when you add to a position, then obviously you've got a bigger position size, and the win that you make will be bigger too. Obviously, what can also happen there, if we don't move our stop in closer and we kept the stop in the same place, then you'd be taking, double the loss. But that's just something that, you have to live with, and you need to decide whether for yourself, whether it's the sort of trade that that you want to take. Now, the only real risk to this trade going forward is that we have the FOMC meeting out on Wednesday evening. Now, we're expecting the whole market's already expecting an interest rate hike from the US, so that much is factored in. What we don't know, or what would be a massive surprise rather, was if the FOMC had a particularly dovish tone in their meeting minutes afterwards. So if they said something like, this is the last interest rate hike for a long time, that would affect the markets, and that would also affect the US dollar, which is obviously one of the currencies that we're trading within this pair here. So if the FOMC are particularly negative, then that obviously is going to affect the dollar, and that will be something that will cause us, if we're not already in the second trade, we certainly won't be looking to take it, and we'll also come out of the trade that we're currently in. So that wraps up this week's Forex Focus. I hope you enjoyed it. I hope you got a lot of value there. If you've got any questions, as always, please feel free to post it beneath the video. Give us a thumbs up, as always. We're really trying to grow this channel. Share it with your friends, all of that kind of good stuff. Otherwise, thank you very much for watching, and I look forward to speaking to you in next week's Forex Focus. Take care now.